401ks are notoriously difficult to figure out what the costs, what the fees inside of it are.
Peter, hello, good to see you. Welcome back to everyone. Today we're going to talk through whether you should buy risky assets in your 401k. Potential changes could be coming to your workplace retirement plan because President Trump recently signed an executive order that would pave the way for riskier assets to be included in 401k plans. 401k plans. I don't know why I said it weird, Peter. What is new here? What's going on?
Well, the potential inclusion of alternative investments and private equity and cryptocurrency inside of 401ks is what's going on. I think it'll be a while before we actually see this enacted. I mean, generally companies, I think, are going to be slow to adopt this, just like the Roth 401k was allowed in 2006, but it really took until the mid 2000 teens and even the 2020s before most people saw the option for a Roth inside of their 401k plan. And many companies still don't offer a Roth. I think that it will be a while before we see private equity and cryptocurrencies and alternative investments inside of 401k plans, quite frankly.
Mm-hmm. So what is private equity exactly?
I mean, it's debt, essentially. It is a loan that you are making, but it is to a firm that is managing that debt, often through like REITs and real estate holdings. And it's has the potential to pay off handsomely, but it also has the potential not to pay off at all. And there have been places where, it's become locked or illiquid. So there is a benefit disadvantage here that we need to weigh carefully if we are going to consider these new alternatives, if and when they are offered inside of our 401k plans.
So just to clarify for people listening, then you said REITs, real estate investment trust. So I can't use my 401k money to go out and buy a house or use my 401k money to go buy Bitcoin.
Not right now on the Bitcoin, but that's part of what's included here potentially, right. But certainly not a house. No, I mean, you can take that first time home buyers loan, which I don't suggest doing, but that's removing money from the 401k, right? No, you cannot go buy a house. You cannot buy, investment real estate that you are like personally managing. You can do that in an IRA, in a self-directed IRA, but even that, it's not like you're buying your personal home or your own vacation property. You've got to have an arm's distance here. And there's, you don't want to get into the gray area with the IRS anyway. So we don't want to commingle retirement money with things that we are actually getting a personal benefit from, because if you muddy the water there, it's going to be a day that you don't want to get that letter from the IRS saying, hey, we've got some questions. We're from the government and we're here to help. But the Bitcoin question, I do expect that some of this initiative is actually going to promote some cryptocurrency holdings within 401ks. And the backstory on the reason why is that stable coins are really getting a push right now. And I think that a lion's share of the market is through a couple called Tether and Circle. I think they hold like 90% of the stable coin market, but stable coins have to be backed by a stable asset. And the flavor of choice there is US Treasuries. Well, the way that we have our $37 trillion in debt is that we issue bonds and treasuries and promise to pay a future interest rate for them. And there hasn't been as big of a market as there used to be, or that we would like to see there. And so by allowing these stable coins and 401k investments specifically to go into those stable coins, it might open up a new market for the sale of bonds and treasuries here, which we're going to need into the future to continue to be able to spend money and rack up debt.
Right.
So yeah, there's a twisted story behind all of this. I think that you need to investigate carefully, even with the options that are going to be presented, that are presented as stable or safe.
Right. Even That's what I love about it, though. They call them stable coins to make you feel better about it, right? What are
Right.
the risks and rewards of alternative investments?
Well, I think that one of the big things that we've heard about here as of the last decade or so is that these alternative investments have done fantastically. They have outperformed even the stock market indices.
Right.
And they have previously kind of only been available to those accredited investors, those with higher net worth and higher annual income. But by bringing them into the 401k and making them available there, maybe that makes the base available to many, many, many more people. And if they're continuing to pay off handsomely, hey, this is something that we'll all hopefully appreciate, right? But the reason why they were always formally only available to accredited investors was that those accredited investors understand investing risk and have signed off that they understand that they could lose everything. And because they are accredited, meaning they've got sizable assets, even if they did lose everything in this single investment, it would not ruin them financially. And I wonder what the due diligence on disclaiming the fact that these are going to be riskier, it could be an all or nothing kind of payoff here, is going to be inside of 401ks. I mean, a 401k provider, your employer, is technically a fiduciary to you as the employee. They're supposed to look out for your best interest. And perhaps by making these higher potentially paying out investments available, that is something that is good for people. But we better do our due diligence and proper disclosures on the additional amount of risk that is also potentially inherent in these. And
Mhm,
I
mhm.
I feel like there's a tale of two sides of the coin here that's going to be coming into coming years.
Yeah, perhaps increased risk and perhaps increased fees, which is my next question. Because I do want to talk about fees inside of 401k, which is generally a 2% management fee plus 20% of profits, aka 2 and 20, versus 1% for managed funds or less than 0.1% for an index mutual fund. Critics say the biggest beneficiary of this rule change will be that the companies that offer them, not plan participants. What do you think?
Well, I feel like it's going to be a while before plan participants adopt it, even if the companies do end up offering, which also, as I've said, I think is going to be a while before that happens. But if you ask any participant in a 401k, any employee who's contributing money into their 401k, what they're paying in fees for that 401k, a lot of times the answer is nothing or I don't know.
Right.
And 401ks are notoriously difficult to figure out what the costs, what the fees inside of it are. But yeah, that rule of 2 and 20, that is a rule of thumb. And 60 Minutes did an expose on this like 20 years ago, I feel like it was now, talking about how 401ks were particularly obscuring the fees. And then there was this push that they were going to have to disclose them. And for a couple of years, that was a big thing. And then it never really came to fruition. They don't really do a good job of disclosing that. And a lot of people just aren't aware. Yeah, but the companies through these offerings may be able to lower some internal costs and fees, perhaps in different places. But access to alternative investments and private equity actually often comes with even higher fees as opposed to things like ETFs and target date funds. And because so many people use the target date funds and kind of just put it on autopilot and think that that's the automatic cruise control type of solution, I'm betting that the majority, vast majority of 401k participants do not even utilize these options if and when they do become available.
Mhm. So then who should consider buying these risky assets in their 401k?
I think very much more experienced and astute investors who understand what these options represent. And I think a lot of people sort of go down the list of options and say, okay, on a 5 or a 10-year track record, which funds have produced the highest returns? And then they try to allocate towards those. You know, that I understand that approach. It's a reasonable approach at a certain point in time. But once you start adding these additional alternative investment and private equity funds in, you also really need to look at the track record, the length of time that these things have been available. Because if that lifetime return looks fantastic, but it's only been around for like 3 years, has it really been stress tested? Like an S&P index fund in the market that just ties its returns to the S&P, that's got a more time tested history of investment compared to many of these alternatives and private equity kind of offerings. Even if the returns don't look like they've been as fantastic, over what time period has that occurred, and has it been stress tested, I think are important questions to ask ourselves, which is why I think only more well-versed and I will say experienced investors really should probably look at these options inside the 401k if and when they become available.
We should revisit this topic a year from now then, Peter, yeah?
And 3 and 5. I think it'll be an evolution. Yeah.
Well, if somebody wants to talk through these, changes with you, or if they just like a closer look at their 401k and they'd like to break down the fees they're paying inside, because like you said, a lot of people don't know. What's the best way to reach you with questions?
Give me a call at Richon Planning, 919-300-5886, 919-300-5886. And look, your 401k is at your employer. I generally don't manage 401ks for clients on an ongoing basis, but we do look at them in detail for people and help people make some choices and decisions on how to utilize them. How much should you be saving? What funds are available? What do each one of these funds do? How much do they cost internally? Like, all of those things are things that investors should know and understand about one of the biggest, most commonly used tools that we have to making our way toward a secure retirement. So if you've got questions about yours, please do feel free to reach out, give me a call. Happy to go over that. 919-300-5886. And you can also go online. richonplanning.com is what it looks like. richonplanning.com.
Great. Peter, thank you.
Thank you. Hey folks, Peter Richon here with Richon Planning. So glad that you are enjoying the podcast, Planning Matters Radio. One of the tools that we've put out there that people really seem to appreciate and really are finding of value is at 919retired.com. It is your retirement tax bill calculator. If you've got any kind of retirement account, your tax deferred, 401k or IRA, this is the website, this is the resource where you can go, you can plug in your own numbers, your information, you can slide the tool calculator up and down for your tax rate or your amount of savings and see what your tax bill is likely to be if you default and defer to the IRS's plan versus what you could potentially bring that tax bill down to. A lot of times it is a very significant savings. So if you have not yet, go to the website 919retired.com, run your numbers on the retirement tax bill calculator.
This has been Planning Matters Radio.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.